Good afternoon. This is Rich Nelson with Allendale, covering the wrap-up commodity comments here. Today is going to be Wednesday. This is August 4th of 2010. A lot of action here on the markets, obviously, as far as big excitement. Let's talk about wheat to start out with. Big gains of 47.5 cents on that September Chicago wheat contract. So certainly that was exciting. This is certainly new highs for the uptrend. And today's last trade, and this is the last trade I have now, the settlement of 727.5 on that September Chicago. That puts them within shooting distance there of the complete contract high for the SEP contract. That is 764. Key interest there is, of course, biggest news is still that Russia is still undergoing this massive drought. These high temperatures, which are going to be up to 107, 108, even 109 this week and up until Sunday, while they will drop down a little bit here for next week, our own Drew Lerner is saying that, you know what, they're not going to be subsiding any massive amount for the next 2 weeks completely. So at this point, there's no relief in store here for Russia and that massive problem that they have. With that in mind, we should expect to see further reductions in production announced maybe mid to later next week for all these Russian grain organizations here. So keep that in mind here, that this whole issue is still working against this market here. So for the short term, this is still a bull market being run by wheat. Over on the corn and beans, we can note, there are some positive things, there's some bullish things we can point out. Number one, as far as the overnight trade, we see that overnight China bought about 121,000 tons of U.S. soybeans, so about 2 cargoes worth here. Certainly, this continued buying by China, which has been much more than expected the past few days, certainly keeps an underlying tone of support here for the soybeans. Secondary of interest, we can note that our own Drew Lerner, as I mentioned before, also gave us some updates on this whole La Nina situation. You remember that a few months ago he had mentioned that we're switching from El Nino to La Nina, and he said that this would start to impact the market and conditions around August or so. This morning's update, he said, you're probably looking at heat staying with us here now for this period through harvest. However, one thing he did point out, or one thing I have to point out about his forecast, is he doesn't have dryness really hitting and staying with us until maybe September or so. So it's an exciting short-term story, but at least for right now, it may appear that soybeans can eke by as far as their key yield-setting time before that dryness really hits, which, as I said before, is going to be in September on through the remainder of harvest. So we have those couple things adding a little tone of support here for smaller base corn and soybean fundamentals. As far as today's action on the corn, up 11 cents. That puts the December contract with a last trade at this time of 4.15. That's within just spitting distance of Monday's high, which is 4.18. Also note on the soybeans, today's 7.5 cent higher trade puts them at puts today's high at 10.29.5. That's the exact same high as Monday. So in other words, we have a double top. We cannot say this is time for a bearish formation or a quote-unquote double top type of selling formation until we see some type of rejection lower, some lower trade here. We could just go ahead and put a double top in here today, but then bust through here tomorrow, for instance. So for right now, bulls are still clearly in control of this market. We do feel in the long term that condition certainly will change, but at least for right now, we must respect the fact that bulls are still in control here. Going into next week, we have this Thursday supply-demand report. This is the monthly one here, and this will be one where USDA does make some key changes on yields for corn. In the past 10 years, the minimum movement in yield that they've made has been 2.5 bushels per acre. And it's been up to even 6 or 7 bushels per acre changes. So we certainly feel that we're going to add a little bit of yield here on next week's report. Our number we're adding in is 3.5 bushels per acre, so putting them at just about 167. So certainly as far as this goes, or I should say 169. So certainly as far as the long-term picture goes, we think that corn and soybeans will be well stocked and will be at lower prices by fall. But for the key in time right now, which is run by wheat and some other short-term issues, corn and soybeans are certainly being run by the bulls here. As far as livestock, we can point out hogs up 7 cents in the October contract. So this October, and in fact all these hog contracts have done a great job in holding up here. In the short term, we've got these issues, meaning with weights and also with with just simply finding hogs. Key problems we have right now is on the supply end as far as just the hogs themselves. We do have a shortfall in hogs showing up during August, which is happening right now, and that shortfall was told to us back on the June Hogs and Pigs report. Also of interest, the recent heat, which is just recently moved more into the southern third of the Corn Belt. That recent heat is certainly having some concerns regarding guys just not wanting to load the hogs up in this heat. Secondary focus, certainly the impacts on weight gains. As of right now, these weekly reports we get from USDA are not showing massive declines in weights, but at least in the next few weeks we should see them show up at least some point here. So in the short term, that news is still with us. And we also have to consider the fact that probably half this rally in recent days, if not actually more than half, is probably related to this poultry issue. And that poultry issue I'm referring to is that massive buildup in orders that Russia supposedly made with U.S. chicken producers for U.S. chicken. One key hiccup, which we did note on this morning's comments and also last night, is this idea that all of a sudden Russia now wants their own inspectors to go to the U.S. and make some inspections. They say 2 weeks for inspections plus 2 weeks for paperwork means we're not going to be shipping any approved poultry out to Russia for a full month. That's at least what Russia says. However, the U.S. poultry companies say, you know what, we've already got chicken on the boats, and those boats are actually now being headed towards Russia. So we have a lot of confusion going on right now in this whole Russian poultry issue here, which we do feel is a significant problem here for pork. So we're going to monitor the situation closely, and you know what, this is just a tough one to say. We get stuff like this from Russia all the time with getting our bullish hopes kind of squashed here. So for right now, yes, the market is still an uptrend, but we do think this is probably getting overvalued for the hogs. Over on the cattle, a massively strong day, up 175 for the October contract. So big gains there. I did take a second look at that midday beef report and noted, you know what, it did look a little better than expected, up 94 cents for choice and up 5 cents for select. So with beef showing some type of stability, perhaps this market maybe see some good news for cash cattle. Last week it traded 93, which was a disappointment. Starting Monday and Tuesday, the trade was looking for steady to $1 lower cash cattle trade. At this point, bids are 91, so it's obvious packers are not running out here chasing these cattle here just yet. But at least for this point, if beef can muster these gains, maybe for another day, maybe we can renew some minor enthusiasm. But at least in my opinion, that maybe this $1.75 gain in the October, probably a little more than justified here. Or a little more than what would be justified by a cash cattle holding steady at 93 at this point. So maybe this market's trying to say we have a chance at 94 here this week. That would be a massive change from what the trade was thinking earlier on here. But overall here, like I said, we've got a big report on next Thursday, that monthly supply-demand report. That would be a big one for grains. Also of interest, which I got to have all you guys here take a second look at here, is this yield survey that we do. So at this time of year, as we are getting to a period where we've got these ears filled, we get a chance to see exactly how pollination went. We always ask our farmers to go out and actually check fields during the month of August, and we make some great yield guesses here for the September supply-demand report. This massive effort by our staff here at Allendale, as well as by certainly all of our farming clients, is undergoing starting Monday the 9th here. So starting on Monday, we're doing our annual crop yield survey. At least in our knowledge, this is the largest actual farmer-based survey where we actually ask farmers to go in their fields, do yield checks, do ear checks, kernel counts, those type of issues that we know of in the entire industry. So this is something that the industry does watch closely, and we get a lot of interest from news wires and also the general trade. So we certainly encourage you guys to take a look at our website, get that yield formula off of our website, and give us a call with your actual yields. Our number is 1-800-262-7538. You can also fill out that yield survey. Like I said, we're starting it on Monday. That's going to be posted on the website, allendale-inc.com. You can also send us questions, comments, and whatnot to our email address, and that's research@allendale-inc.com. This is Rich Nelson. Hope you have a good trading day and a good trading week.